Hello traders, hello everyone, welcome to our new intraday video update. Now we have seen a nice move firstly up on euro dollar last week, but then as you can see market immediately reversed for almost 100 pips from the highs. However, we are still trading above this lower trend line support, so technically speaking it still can be an uptrend. But what I would love to see on the hourly chart is that we see an overlap with this 1.1162 level, because if that would happen, then obviously this decline would be labeled as a completed ABC correction, because after all it's still for now an ABC move. Okay, I mean a free wave move. So if you see an overlap with this price, then definitely more upside would be seen. If on the other hand market will drop to a new low while we stay below this level, then of course this drop would become a 5-wave structure. So at the moment it's really unclear situation for the euro dollar. I really do not like too much bullish interpretations if I see move to new highs and then immediate reversal, but I have to respect this trend line after all. So if from any reason we'll just see a breakdown, then obviously I would have to go with the new wave count, and in such case I'll look for something like that. Okay, wave A, triangle for a wave B, and would expect more upside for a wave C. Wave B in such case can also be a flat correction, which means that even this swing low can be retested. So based on all of these developments, I think it's okay if we are out of euro dollar longs, which happened on Friday at 11:20. It's okay. I mean, if pair is not going higher sharply yet, then I just think it's better to maybe to spend some time and money investing on some other markets. Now let me also take a look on dollar Mexican peso. Okay, it's been a while since I have looked at this market, but it looks like it has some very nice structure. Okay, what I see here is a very strong drop in 2017, and since then market just moved sideways, and looks like that this sideways correction can finally come to an end. Why? Because market, after this very long trend line, market is now trying to break significantly below this trend line. Notice this move, it's a very sharp. Okay, so I think that there is possibility for much lower prices. What I really like based on the intraday charts is that I will focus just on this pattern from that high to current low. I see this as a very sharp, so it's an impulse. Even if it's a wave C, even if it's a wave 3, even if it's maybe wave 1 of a lower degree, still this drop must be in 5 waves. So I'm looking here at the 4-hour chart. I see wave 1, I see wave 2, and notice very strong extended wave 3 that caused a break below this trendline support of a base channel. So ideally this is an impulse on the way, because this breakout normally occurs in an impulse. Also, if that's the case, then we are now in a wave 4, and ideal resistance for a wave 4, well, would be right at this trend line. Okay, maybe we get a final kiss and then a drop. Also the 38.2% of course is important as well, and this 38.2% comes right into this fourth wave of 1 lesser degree. So I would say that this whole zone is very important, is going to be very important for dollar Mexican peso. Also what I see I didn't add is this distance of a wave 2. Now sometimes when you have wave 3 very sharp, you may see that wave 4 can be equal in distance compared to the wave 2. So in such case what I see here is that actually this comes in around 1950, around there. Okay, so it's a very interesting zone for a potential drop. So dollar Mexican peso definitely worth to keep an eye on. Now let's take a look on dollar yen. Now dollar yen, I think it's still on the way to higher prices after this flat correction for a wave B. So wave C should be made by 5 waves, and looks like that recently we have seen a very nice pullback. I highlighted this as a potential support in intraday updates last week at the former wave for 109.20. It looks like that we are now turning back to the upside. Also this is seen as a free wave move, so I think that this 109.72 high will be taken out, okay, and this will be fifth wave. So of course later this week we should be aware of potential limited upside. Of course it depends what will happen with stocks, what will happen with the 10-year US notes, but I think that this will be a final move before reversal occurs, okay. Why? Because I see the 10-year US notes already shifting to the upside, okay. Notice that market found the base at the first support that I talked about last week. The second support is a little bit lower, but looks like that we have respect what is happening now. We have seen a rejection of this level, so a lot of stops were cleared down there, and looks like that we can be headed higher. Now bullish level still at this wave E, so before this happens, well, that's when dollar yen have a timing maybe to just to complete this 5-wave cycle. But when this triggers, when this market really starts to move aggressively to the upside, that's when actually that's when dollar yen could also hit the highs. Now looking at the S&P 500, I really think that we should consider 2 wave counts. Let me switch to 4 hour. Okay, so the first wave count, actually 1 hour. The first wave count is that we have a deal with a flat formation because a free wave moved to a new high right into this resistance, and you can expect a drop into wave C. Maybe this wave C can be part of a flat, maybe even a running triangle. Okay, now the next market, the next wave count that I'm tracking is potentially wedge here for a fifth wave. If we see more upside in the next 48 hours into this 3200 area, then of course we should be aware maybe of this one, okay, that we are already finishing fifth wave. So again, in both cases there will be a limited upside in my opinion. So the 10-year US note, despite this breakdown, still it's a very important market for me to track. What I like in general about the 10-year US notes, that we are not seeing any progression to the downside, okay. You can always see that when market dropped to a new low, there was actually bulls that immediately stepped in and caused reaction back to the upside, okay, market rallied. So this tells me that bears are not that strong, so it makes me feel that this is wave 4 or corrective move from this August highs after all, okay. So that's for the S&P 500. I think that limited upside can be seen this week. Now looking at DAX, we are also here in a fifth wave. There's room for much more upside here. After all, DAX made a much more aggressive bullish reversal last week than DAX, if we consider this market rallied 500 points. So in my opinion, maybe DAX will still see more upside here, but again, keep in mind that we are in a fifth wave, okay, of this. Let me look at the daily chart of this bullish cycle. Okay, there is some very nice resistance up there, but after all, if stocks will in general move to the downside, then of course maybe we'll not even see these levels hit. Now let's take a look also on silver. Okay. Silver here. Okay, so silver still consolidating, but what I like is on the 4-hour chart, notice this very nice potential corrective decline with a wedge or ending diagonal, if you want, here in a wave C. What I like is that market is not trying to form a break above this downward corrective channel. Also on an hourly chart, you can see a very nice waves 1, 2, 3, 4, 5 waves from the lows. So ideally we are now in a corrective formation now, and we'll see more upside. We'll see what will happen with gold at the same time, but keep in mind that gold and gold silver ratio is declining, so silver is at the moment much better, okay. So definitely if this silver will move to the upside, then still I think that sooner or later gold will also find the upside. Now let's take a look also on crude oil, okay. Okay, crude oil is still moving to the upside, approaching some very nice resistance here at $60 per barrel up to 61. I see potential late stages of this second zigzag. So this was the first zigzag, Now you have a second zigzag, and here's wave X, okay? And I can also count 5 waves up here into this wave C. So I think that this zone up there is very interesting, but as always, we just have to be patient here and wait on a 5-wave rise. I would not be buying here, okay? I would not be selling here. What I'm looking at is just firstly a 5-wave drop, then wait on a pullback, and then expect more weakness, okay? So that's for crude oil. At the same time, if crude oil comes to the downside, maybe you would look at the dollar CAD down here at 61.8%. We are in ABCX, possibly ABC correction after this wedge here in wave A. So it will be interesting to see if crude oil really finds the sellers, that if this market rallies here above 132, then of course this market could be headed even higher. But generally speaking, dollar CAD, I mean, it's really not offering any good or clear visible trends, because after all it's a sideways move, okay? I'm just looking from intermarket analysis perspective what may happen with dollar CAD if my interpretation of crude oil is really going to prove correct, okay? Now let's take a look also on euro pound. Now euro pound came nicely to the downside. Possibly it makes 5 waves down into wave 3. What I like about the euro pound is that actually market moved below this swing support, okay, from this was from 2016. So important levels, when they are touched, new important pullbacks may occur. So ideally we'll see a 4th wave bounce and then a new drop. Also I can see that on hourly chart there is a chance that you can count 5 waves up here, okay? So I think that sooner or later euro pound will recover, and we'll see what will happen with cable. At the same time, as you know, I have seen cable moving out of a triangle in a 4th wave, so maybe the 5th wave is coming in place actually, and we will see a major pullback. Okay traders, thank you very much for your attention. Talk to you soon. Bye.